Why those new cars not only remain up but may not go down anytime soon is a fascinating one. This investigation sought to get to the bottom of. One expert who runs a car app that monitors prices across many dealerships actually explained it this way: automaker factories shut down during COVID. When they spun back up, there's a huge shortage of semiconductors. With that shortage, they then prioritized their most expensive models over cheap cars. This way, the only ones that get produced actually make them a big profit. Then, though, when they get to the dealer takes advantage of the shortage, and the premium product goes even higher by racking up the price more than they ever could have dreamed before 2019. One government estimate actually found that auto dealers make up anywhere between one third and two-thirds of all new car inflation that consumers are experiencing. It must be a good line of work if you can get it. These car dealers are printing money all throughout the pandemic and now, as you can see from the chart before you. They continue to do so, largely because they have discovered their game. They're going after wealthy clients who have a ton of money post-pandemic and in many cases can pay straight cash. They don't have to worry about a car payment. This, of course, reduces the number of people who can even consider a new car, given that the current average price for a new vehicle hovers around a whopping $50,000. This is what makes used car price so powerful. They make up more than two-thirds of the entire car market. But I've got bad news, too, for everyone on that front. The share of used vehicles for sale today in the U.S. today, below $20,000, remains near the bottom. To put it in perspective, more than 60% of used cars sold before 2019 were below 20 grand. Today, that number is 30%. In fact, a new analysis finds, quote, even the average 7-year-old vehicle with 75,000 miles on it is selling for more than $20,000. The current average selling price of a used car is some $28,381, which feels crazy to say out loud. In my head, that's what a new car should sell for. Yet, here we are. This underscores, again, just how much the backs of the poor and the middle class are against the wall. A sizable portion of the U.S. population is quite literally a blown tire away from bankruptcy, with very little options if they get in even a slight pickle where you need a new vehicle other than the one which you are driving. Really, what this underscores is the death of entry ease in the country. There are no more starter homes because the average price of a home is $436,000. That's 32% increase in 2 years. The average mortgage payment is now $2,300 per month. That's 30 grand a year after taxes. Of course, that includes shelter. So if you abide by the rule that mortgage payments should be no more than, let's say, a third of your take-home pay, it really means your take-home pay needs to be like 90 grand. Now, average household income in the U.S. is $75,000, which means that for most people, they responsibly probably should not buy a house in this current environment. Roll in a car payment to that. Per bank rate data, the average car payment today is between $500 and $700 per month. Not only that, car insurance rates haven't skyrocketed lately, adding an additional $2,000 per year on average. The total of what I call the existence tax is actually getting to a point where even on average income, it is getting straight up uncomfortable. And I will end with this. The way that economists and even people like us sometimes talk about inflation and overall prices, it really misses a mark. You got core CPI, core inflation, all that stuff. It misses this point. Certain prices are just more important than others. The price of housing, the price of a car, the price of gas, the price of food, healthcare. Those matter more than any others. They're burned into our everyday ability to survive. And when we start seeing not only inflation in those areas, but inflation and wild swings that vary more than the prices of random consumer goods like TVs, then we have a really screwed up economy.